Welcome back. Well, for the markets, it's okay at this point in time, actually doing well. So we have the Nifty, which is up around 137 odd points. We have the Sensex, which is zooming ahead with a gain of around half odd percent. And the Bank Nifty, which is moved into the green as well. So up around 50 odd points currently for the Bank Nifty. The mid-cap index, like we mentioned, is outperforming at this point, 500 points higher currently for the mid-cap index. But let's talk about one specific stock. Jupiter Lifeline is in focus. That hospital company, which has hospitals in Thane, Pune, as well as Indore, has reported what was a steady state of Q1 numbers. The hospital is planning to double its bed count to 2,500. And however, separately, the occupancy has dipped a bit on a year-on-year basis. We have with us Dr. Ankit Thakker, who is the CEO of Jupiter Lifeline Hospitals, joining in now. Ankit, hi, welcome to the show. Well, it's a good growth this quarter, revenue growth of around 20 odd percent. But can you break up what led to this 20% growth, considering that your occupancies were a little flattish this time?
Hi, Ekta. So, the occupancies in this quarter on an absolute basis are slightly higher than last year because we added around 100 census beds in the previous financial year. Because of the expanded base, bigger denominator, on an relative terms, the occupancy looks lower. But on an absolute terms, the occupancy this quarter is about 5 odd percent higher than what it was for the same period last year. So that has been one contributor for the growth in revenue. The other contributor for the growth in revenue is continual expansion and case mix improvement in our Indore hospital, along with the regular inflation-linked pricing, which also plays some role.
So just wanted to understand that when you talk about this mix, which has improved, can you tell us about the complex cases and the percentage of the mix which now comprises of complex and say less complex cases?
So qualitatively, the share of critical care, both medical and surgical, has gone up. The share of oncology and oncosurgeries have gone up. Hematology has gone up. So qualitatively, we are doing more of tertiary quaternary work in Indore than what we were doing in the previous years.
Right. If you could give us a sense on what was the same store or same hospital growth and the occupancy increase and the improvement that we've seen in your newer hospitals. Going forward, what would that do to your operating leverage from here on? So, maybe a growth target for the same mature hospitals and a further delta coming in from the hospitals that are now ramping up?
Right. So the Thane hospital, which is fully mature, like you said, does not have too much of a occupancy growth potential in its current shape. Pune and Indore both have significant runway for occupancy improvement. Pune is around 60 odd percent. It can go 70 plus. Indore should be around the halfway mark. It has a significant growth opportunity ahead of itself. So qualitatively, both Pune and Indore can contribute significantly in terms of occupancy.
And what does that do to your margins? What can we look at by the end of this year with case mix improving, with occupancies improving, and having some inflation-linked price hikes as well?
Right. So I have said that, mature hospitals should deliver somewhere in the zip code of 25% margins. And the growing hospitals will over time catch up to that number. So nothing much changes in our thought process on the margin front.
Okay. All right. You have mentioned that, you've taken on additional debt and hence your finance costs have risen, depreciation because you have your expansion which has come on stream. So what is your profit guidance for the coming quarters and for, say, FY26 as a whole?
So I don't have a number guidance, but qualitatively, as I said, the EBITDA margins hopefully should be preserved over the next 3 quarters as well. However, the gap between EBITDA and PBT is expected to be wider this year because, like you pointed out, the depreciation from all the capex last year is kicking in this year. and some finance-related costs are also higher this year. So while the EBITDA we hope should be preserved, the PBT and PAT should be a little lower.
Okay. So when you say lower, how much of a decline should the street expect in terms of the profit?
In the
Up to
first
5.
quarter, we have about 1.5%
Yeah.
lower than last year, same period. So I think it should probably track that way.
Okay, all right. So maybe up to, say, a 3 to 4% decline in profit is a reasonable assumption?
I have not done the math, but whatever, however you extrapolate the first quarter into the year.
All right. Just coming to, the fact that you've taken on additional debt, around 350 odd crores. What's the plan in terms of strategically expanding in the western part of the country? Because you have mentioned that you all are looking to do that. Any inorganic plans that we can expect from you?
So the 3 new hospitals have been announced, Dombivli, Pune and Mira. Those 3 we should be able to complete with internal accruals and reserves. This debt is just to kind of build our coffers that in case another opportunity comes up so that we could also launch a 7th hospital, then we should be ready. We are open to inorganic opportunities if something sensible does present itself. However, there is nothing currently in the works. We are discussing for a few greenfield opportunities as well. The moment I have something to announce, I'll definitely talk about it.
All right. And finally, with all these 3 coming in, assuming that there is no immediate inorganic and announcement that comes by, what is the kind of growth that you anticipate over the next, say, 4 to 5 years with your current capacity and the capabilities that you've announced? Is there any more that you're looking to announce beyond these 3?
Yes, so with these 3, we naturally become a little over 2x in the next 4 to 5 years in terms of capacity, and then obviously that should translate into numbers. But yes, the intent is to also do one more. When, where, how, in what shape, I don't know today. But there is an intent and desire to maybe do one more.
All right, take that point. Thank you so much for joining in and giving us the outlook on your business for this year. Wish you good luck with all the expansions and the mix that you speak about as well. With that, we'll take a short break. But as we do that, remember to stay tuned to the all-new CNBC TV18 Prime, which brings you insights from policymakers, business leaders, economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. You can tune into CNBC TV18 Prime at 12 noon for the Global Reset, 1 p.m. for the Big C, and Global Lens that comes in at 8:30 p.m. on weekdays and weeknights.